Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be doing a brief update on BTC, taking a look at what's been going on most recently on the charts and in the background data. As I get into this video, if you find it useful and informative, smash the like button. I do appreciate that. If you're new to the channel, go ahead and subscribe, tap the bell, and you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't joined us in Discord, links in the description below, guys. It's a fantastic community. It's a central hub of Cheeky Crypto, so check it out. It's completely free in the description below. Okay, let's make a start. Let's talk about Bitcoin here. Now, I don't really want to talk too much about the current price action within this hourly chart, because it's pretty obvious kind of where this is going and what's going to happen from a charting point of view. But there's a lot of stuff in the background as to kind of, you know, what might actually occur, what's happening right now, why we're seeing things move the way that we are. Okay, so straight off the bat, we'll talk about the DXY again. The DXY is going down, crypto assets go up. Okay, so the underlying issue here really is that the intrinsic value of Bitcoin isn't really measured in USD. That's just the currency that is used for purchasing. And you know, you could look at it from let's say an Aussie dollar all the way through to a yen or a euro or sterling. We talk about dollars because it's the most widely used one, it's the global reserve currency, yada, yada, yada. But we should also note that just because we measure something by that particular currency doesn't mean that's where the value actually lies. Okay, so it's an underlying value of all assets, and the DXY moving is basically adjusting how many dollars you need to buy that asset, right? It doesn't mean that there's an increase in demand pushing the price up there. So we should really talk about that straight off the bat. There isn't the demand to push the price up the way that it is going. It is all driven from the DXY going down. Okay, so as DXY goes down, as the dollar is worth less, you need more dollars to buy that asset. Okay, it's as simple as that. It is as simple as that, unfortunately. So here on this chart here, you have the inflows and the outflows. You can see that they have come down dramatically over the weekend. This is pretty standard. You see this every weekend. This isn't unusual by any stretch of the imagination. We basically see 19,000 Bitcoin go onto the exchanges, 19,000 Bitcoin come off the exchanges. And whether you see the red line is above the green line, that's basically a lot of supply coming in and is not enough demand to soak it up, right? So recently we've seen here a lot of supply coming into exchanges, but it hasn't really been soaked up in any meaningful way. And again, over the last few days, you also see the same thing. There are some significant spikes up, and we talk about this with wallet counts and things like that, but just bear in mind that there isn't really the demand to soak up the additional supply that is out there. And really the only thing that's really happening here is that the DXY has been going down. That has basically meaning you need more dollars now to buy those assets. Okay, it does not mean that there is more demand. So when we take a look at the price action here, we know that things are moving along with the DXY. We know there's an upper limit to this thing. It can't continue going the way that it is. Eventually that DXY is going to turn around and the DXY goes up, the crypto asset goes down. You need fewer dollars to buy Bitcoin. Okay, so at the moment, I have this range just up here. This is 21,750 to 21,901. This particular area, if I zoom out, is an area that resonated really well over here during August. So my expectations are that maybe this is the area that we're going to come back, retest to, find that this is where a lot of the resistances are. And at the same time as this is happening, I'm expecting the DXY to reach also these low areas down in this range. So they're going to see that little bit of a push to the upside. If I just slice this across here, for example, you can see that this is the area where we're most likely going to find reversal with the DXY as well. Okay, so just bear that in mind. And from a stochastic RSI point of view, not that it's really good for the DXY, but you can kind of see it's the opposite of what Bitcoin is telling us, right? We're oversold here on the DXY, yet we're overbought here on Bitcoin. They're the opposite ways around, okay? So when we have these things and we kind of start reflecting on, okay, well, where is this going, right? Who is buying, who's getting involved, who's not getting involved, and all those things. So if we throw the volume in here, let's just bring this up. You can kind of see that during this move to the upside, our volumes have been decreasing. Okay, so we know there's less and less activity. Now, I do want to kind of note that the volume has been reasonable over a daily chart. Like when we zoom out, a lot of activity going on, but it's not like a clear-cut definitive we're going up. It's just buying volume. There's actually a real good mix of buyers and sellers, and that's why you're seeing this price move around a fair bit on the daily chart. But we've got to bear in mind that the underlying issue really is the DXY. It's not really price analysis driven. But there are some opportunities that come from a DXY behaving the way that it is. Because the amount of dollars in the that you need to buy these assets goes up, it does actually increase a bit of selling pressure on some certain types of individuals, so like institutional level players who have now seen a huge bump just because the DXY is pulled down. This is actually a fantastic opportunity to think about your positions and whether or not you want to kind of come out of them. And we can actually go into this by taking a look at some of the wallet counts when it comes to BTC. So here we can see that there's the retailers, right? These are your 1 Bitcoiners or your 10 Bitcoiners, high net worth individuals and your everyday kind of worker who aspires to be 1 BTC in their wallet, right? To have that. And you can see that these are changing. They're two different perspectives here. We've got your high net worth individuals actually getting shaken out of the space a little bit, coming out of their positions. They're not going in. And you can see over this side here that actually the shrimps continue to accumulate, right? These 1 Bitcoiners. So you got to think of it this way. This doesn't necessarily represent sellers. It only shows you the number of wallets that have said amount of Bitcoin in them. So when we think about, these, dolphins, these 10 Bitcoiners, and they're decreasing their wallet counts, then actually that Bitcoin has to go somewhere, it has to transfer somewhere. Okay, so if they're coming out, someone else has to be buying it, or they have to be transferring it to someone else, right? It can't just disappear out of one of these wallet counts. We kind of count for everything here, anything that's above 1 Bitcoin anyway. So we can argue that maybe the 10 Bitcoiners transferred over to the shrimps, and maybe the middleman was an exchange, right? We can't see huge inflows and outflows. There's not really a lot of demand there. So we're going to have to make the assumption that actually 19,000 Bitcoin goes into the exchange, 19,000 comes out of the exchange. You're basically just transferring Bitcoin around participants, okay? So as we kind of go up into the next size wallet, these are your bigger players. These are your big traders, your whales, your institutions, right? We call these sharks, whales, and krakens. These actually give you a very clear glimpse into kind of what is going on in the background of how people are behaving, okay? So we have the sharks continuing to come out, okay? So traders who aggressively follow price action are basically just leaving it, right? The DXY's gone up. Their Bitcoin's now worth a little bit more. They can come out. They can use this as liquidity for retailers to come and buy it because they think that there's a bull run here. They can come and buy it all up, and they'll buy it from these guys here. So you see the dolphins coming out, you see the sharks coming out, and you can also see that the whales are coming out. Okay, so this means that who's holding these bags at the actual end of the day seems to be your lower than 1 Bitcoiners and your 1 Bitcoiners to 10 Bitcoiner area, right? So basically your retail money. So your retail money is coming in, thinking there's a bull run, buying up all the Bitcoin, and they're buying it from the dolphins, they're buying it from the sharks, they're buying it from the whales to a degree. And I say to a degree because we can't ignore the Kraken-sized wallet. Now, these are your big institutions. These are your Teslas, your Elon Musks, your MicroStrategies, your Chinese government. That is these wallets here. Now, the importance of this wallet is really important, okay? It's one of those wallet counts that is hard to explain to some people because it's not something that you're going to fully appreciate until the time actually comes, okay? These wallets, they do some really interesting things when we take a look at the data, okay? So 10,000 Bitcoin or more, big participants. I think that these wallets work in conjunction with the whales. Like I said before, just because the wallet counts are changing doesn't mean they're buying or they're selling. The inflows and the outflows are pretty clear that there's not terribly too much demand. So it's actually more that Bitcoin's transferring around between participants. And then we start thinking, well, the whales are coming down and the Kraken's going up quite a bit. Is the Kraken-sized wallet actually just cold storage for the whales, right? Is there some kind of collaboration between these two sized wallets? If you've got a warm wallet, one that's out there kind of actively kind of scoop up as much liquidity as they can, and then they transfer it over to the Kraken. I don't know, but it's interesting to see how these two things are, going the way that they are. Now, with that being said, we have to appreciate what happened in 2018 here. One, we obviously see the accumulation of our whales, but we also saw the accumulation of the Kraken-sized wallet all the way through the bear market until the very end, where they drag the market down into a bear market bottom. Okay, so we are on the journey here during this accumulative phase for these wallets. In 2018, there was 126 of these wallets before it fell down to the downside. Now, if I come over to this size wallet for 2022, you can see that we're just accumulating and we're going up. We're waiting for that moment where these guys actually decide to bring the bear market bottom in. It hasn't happened yet. And the same thing happens when we take a look at the shrimp size wallets from 2018. They're accumulating until they start getting shaken out. When they get shaken out, that is where the whales are buying it. Okay, during this flat period right here, you can see that this is where the whales are buying it. and you can see that this is where the shrimps were selling it, right in this little area here. Okay, so we know that we're waiting for the shrimps to sell. Once they get shaken out of space, the Bitcoin whales are going to be buying it, and then once the Bitcoin whales are buying it, you can see this little dip right here, the bear market bottom, and this huge uptick here with these counts of wallets. This happens when this guy drops it on the market. So whenever these wallets, these 10,000 Bitcoin or more, decide to drag that market down, this is where you see that uptick with the whale counts as well. So just be aware that the market's going to be moving in that particular direction. I don't think anything different is happening this time round than what has happened previously. Here are your whale counts. They're just going down. They're not going up. No big money is backing BTC at the moment. And because of that, it makes me think, why should I be backing BTC? Why should I be backing cryptocurrency assets if big money isn't backing it either? These are normally the players that are always generally on the correct side of the trade. These are not the ones that like to fail or like to lose. And we also have to understand that retail investors have a really bad track history of actually being on the wrong side of things, thinking that A is happening, but actually it's B the entire time. So just to think about this objectively, look at the data and what does the data tell us? What is going on, and do we honestly think that the whales made a big mistake, or do we think that actually retail is making the mistake? Retail thinking that the bottom is in, when actually I don't think that is the case. So let me know what your thoughts are in the comments down below. As you can see, we're looking for a little bit upside here on the BTC price chart, but I don't think it's going to last all too much longer, and we are going to see a reversal, and I do think a new lower low is just around the corner. Guys, let me know your thoughts in the comments below, and do join us down in Discord and continue the conversation there. Guys, until the next one, have a fantastic day.